please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, let's move on. It has been an extremely weak showing by Eveready this quarter. The company, I think, for the first time has reported a net loss of 16 crores. There's an EBITDA loss as well of almost about 4 crores or so for the quarter. For the full year, the profits have fallen by 41%. Amritanshu Khaitan, the MD of Eveready India, joins us now to talk about that. Amritanshu, good morning. It's quite shocking to see these kind of numbers. Of course, in your press release, you've given a whole host of reasons for this loss, whether it's higher employee costs, advertising expenses, etc. But I would like to understand from you whether this is just a 1-2 quarter issue, or do you think that these issues could last through FY19? What are you forecasting for FY19?
Sonia, this is a completely one-quarter phenomenon. The core business of Eveready, which is batteries and flashlights, had a very, very low turnover in Q4. And basically, the growth impetus which the company is putting onto lighting and appliance had a very high quarter in Q4. So a lot of the investments had to be pushed into the second half. So that's why if you see Q3 and Q4, both quarters we've seen high ad expenses and high expenses being bunched up. And that resulted in this quarter going into the red. So I would take the full year performance rather than a one quarter to view the company's business. If I look at the full year, we have actually performed extremely well in the lighting segment, which has clocked an EBITDA of over 30 crores as against virtually a break-even EBITDA. Appliance segment has posted a loss of 20 crores. That is the investment being put in. But we have recorded a excellent growth from a 40 crore base level to about 108 crores in the year gone by. The reason for the main profitability drop in the full financial year has been that our Haridwar plant used to get benefits of around 35-40 crores in terms of excise. Now, when the GST came in, those benefits stopped, and only end of November did we start getting partial benefit from our Assam plant, which has been commissioned. So if you see the overall EBITDA dropping from 130 crores to 105 crores, the large chunk of this loss is due to GST transition as well as benefits expiring in Haridwar. The company has already done some consultancy, got some consultancy done on cost-saving measures, and those will actually yield in EBITDA margins expanding for the full year into FY19. So I personally see FY19 being a very strong comeback for the company. We should post a 15% kind of top-line growth, which we saw in Q4 as the trend going forward for FY19, and that should yield a PBT growth of 35 to 40% in the full financial year. Investments will still continue in the growth segments, and those will yield better performance as the company grows its top line in the newer segments and we reach economies of scale. So if you see Eveready as a company, you have to see that we are diversifying into 2-3 large categories, and the benefits of these will actually come in the next 2-3 years. It will not be a one-year story for the company.
Yet you're saying, Amritanshu, that your PBT could be what, 140 crores in the current year? I mean, you said it's about 30-40% higher. EBITDA should grow from 100 to 135, 140 crores. Okay. But won't there be some continuing expenses like advertising and distribution costs? I can understand management is consulting is a one-time charge and the employee uptick perhaps. But some of these will continue for the full year, isn't it? Won't that impact margins?
A lot of it has been front-ended in this current financial year. To give you an example, today we've set up distribution for appliances where the turnover has gone to 100, but when this grows to 135, 140 crores, it's with virtually zero cost in terms of employee being hired. The company has also hired a large team to get into professional lighting, where we have just bagged an order today for about 6 crores from the KMC, which is the Calcutta Municipal Corporation for street lights. So those will start yielding results in the current financial year, where a lot of costs have already been inbuilt in the last financial year.
Okay. What about in your LED products business? I mean, this year you had quite a strong performance over there, 11% margins as well. Going into next year for LEDs particularly, what are you expecting?
So our LED, or I would say total lighting business, clocked about 350 crores revenue, and we had a 11% EBITDA margin. Going forward into next year with our entry into professional lighting, we think we should be able to scale this up to anywhere between 400 to 450 crores with similar margin profile.
Okay, so 400 to 450 crores for the LED business. And just before we let you go, you know, on the packet tea business also, you've seen an EBITDA loss this time. Of course, you're saying that you're trying to sort of mitigate this position. But how long do you think it would take before you turn into the black there?
So the packet tea division will be hived off. There's already a MOU, board approval where McLeod Russell India Limited and Eveready will be making a joint venture. So the complete packet tea business by the second quarter will move into that joint venture company, where both companies will own 50% each, for which Eveready will get a consideration of 20 crores. So thereby it will move out of the standalone operations of the company.
Okay, will that take away some of the debt as well?
See, the net debt in the company is around 200-220 crores.
Okay.
We think that obviously this 20 crores is a very small investment, but the board has approved looking at some unutilized land parcels which are lying in this company, being a very old company, which over next 12 to 18 months should be monetized, and that should bring the debt down substantially.
Okay. Amritanshu, it's always a pleasure speaking with you. Thank you very much, and all the very best for your new businesses as well.